afternoon, everybody. It's TK with ReadySetFutures and ReadySetFutures.com. It is the 11th of October, about 5:30 p.m. Pacific Coast time, and this is your daily market wrap-up for the 11th of October, 2016. Let's get to the headlines. We've got copper, slight bid in the market, gold continuing to chop around, crude fading lower on no news, no jawboning, no lift, and the ES absolutely smoked off of the volume point of control. If you guys caught this morning, I am remote, got called out to some business, and I'm going to be remote all week, so apologies up front for decreased audio and visual quality, but it's what it is. I thought it was just more important to get this out to you guys. So action today, why don't we get right into it. We've got copper up on the screen. Just kind of zooming out. We're going to zoom right back in. We've got our two volume points of control. This back from July. The second here, closer to us since early September. You can see last week we traded down into the volume point of control, and then we found a lift higher, running stops above $2.19, trading up to $2.20 before falling off. Today's action, believe it or not, caught a slight bid. You can see here, right in the 8:30 hour, we traded lower before levitating somewhat higher throughout the day. Copper is an interesting market. It's an interestingly kind of diverse market. Certainly, copper is an industrial metal, and some of the deflationary pressures in the world definitely influence its price. But today caught a bit of a bid. Heading over to gold. Gold on the day. This is our volume profile simply from the sell-off that we had at the beginning of last week. And as you can see, we've been trading down right along this. You see that 70% retracement around 1256. That was actually our target on, if we were taking a short bet. And I hate to kind of call these things post haste, but if you go back to some of the very early ReadySetFutures.com market wrap-ups and daily previews that we used to do, around 1350 was where we were targeting a short entry, and this really we were looking at a 61.8% retracement. Put that 70% retracement down here at 1256, also super prescient. And you can see accepting and attracting a lot of volume. Actually, our current volume point of control down here at 1257. We expect gold to continue to chop around before we see it higher. We may see a scoop at this low down here at 1243, but I would doubt it. If you're a bull in the market, certainly a target of around 1270 at the developing volume weighted average price. And if you wanted to hold a bit further, 1275.5 is the upper value area boundary. But today, more chop. We had a trading range here. Let's see, around 1260 down to 1252, and now we're back up, literally sitting on the that 70% retracement of 1256. So. Not unexpected considering the move down in gold. We have built quite a bit of volume down here in the 1250 to 1265 range, 1270 range, and now that our volume point of control has shifted down here, we expect to see a move higher in gold. So when that's going to happen, we're not sure. Okay, and we're back. I'm not really sure. As I said, I'm remote, trying to get all this working together. A bit unprepared, but nevertheless, here we are. Like I said, the commitment to trader action in gold, we kind of saw this move coming just based on what the commercial interests were doing. Depending on what they're doing this week, the following weeks, will kind of inform our opinion of when we expect to move higher to gold, or another possibility, it just doesn't materialize and we end up trading lower. But our thesis here in gold is that we would see this move lower before higher. But we head over to crude oil on the day. Crude oil's action, we're going to kind of zoom in here. This was yesterday's movement off of Russian Prime Minister Putin. He, communicated that Russia would also sign on to production cuts along with the Saudis. Big news, considering Russia being the largest oil producer in the world, Saudis being the second. Interesting news today. Rosneft, I think it's the largest, or either that the second largest state-sanctioned oil producer, contradicting Putin, at least on the surface, and saying that their company would not agree to cut production. And in fact, for the month of September, produced the highest amount ever. So, if you've been listening to us, you understand at least my position on this, that this is talk. This is an attempt to raise the price of oil through, call it jawboning or through semantics. But it's interesting to see how far this market reacts to words. But nevertheless, oil traded down today. You can see here on the open. Well, we'll kind of zoom in here. Oil is always an interesting market. Let's just go to the 5-minute chart for good measure. You can see this gap here. That's the Globex open. And let me change our scaling factors here. So off of the open, we were bid. You could see it right here. This is the opening bar. Quite an interesting bar. It's a stop run bar, no doubt, on oil. That's what this market does. And you can see this swing high right up here at 51.48. What did we get up to? 51.54. So 6-tick stop run, 5-tick run, and then we sold off for the rest of the day. And excuse me, no buying really to speak of, no aggressive buying to speak of after this impulse down. So does that portend anything for the future of crude? Maybe, possibly. I can tell you that this, certainly the information coming out of Rosneft had an impact in this market today. Will it continue to have an impact is really the question. As you guys know, we think that we do like oil lower, but you kind of you got to pick your spots in this market. Lastly, let's head over to ES. ES, as you guys know, I was short in the ES. This is still a 5-minute chart, so let me bring this back out to our 60-minute chart so you can see kind of the full days action, the full deal here. So let's see. This is our volume profile from, Janet Yellen and her hawkish hold. Today's action is on the hard right edge all the way over here. Yesterday's quick bid off of the Russian announcement of cutting, and you can see we sold off. We sold off into the overnight, right on the open. This market dumped right off of our volume point of control, 21.53. We blew out stops all the way down here to 12.35, and we just kept on going. I ended up getting tagged out of the market down here. It was 21.27 even, and that's for a 27-point run on the ES. So this is why I like swing trading, guys. I know I used to be a day trader myself. I'll be honest with you, I wasn't terribly good at it. I liked it. It was very much more emotionally engaging for me, but found that if I actually reduce my size and increase my time horizon, my analysis, the analysis that I do using volume profile, commitment to trader, it's much more attuned to that style of trading. So today was a good day. We banked We banked into the positive, and we feel good about that trade. I'm not currently in the market any longer. I have to I got to make some evaluations here because this looks like a bear trap, in my opinion. Is it going to get bid back up? It very well might, and it very well might get bid back into these support and resistant lines of our triangle or wedge or whatever you guys want to call it. But keep in mind, those are just lines in a chart. We've had them up here for about a week and a half. This time they worked, they were prescient. Future times they very well may not work, and you find yourself rationalizing moves based on some silly lines on your chart. And I don't know. I don't really consider that to be trading. But in any event, we didn't even pay attention to the 2140 region, at least when we look at it from an hourly perspective. But why don't we zoom in and we can take a peek here. Why don't we go a little deeper into the 1200 tick chart, just to kind of elucidate see where the chop zone was. So you can see here, that was yesterday's action down here. Let me get into it. So around here, this is where 2153, 2154, you see that's about where we opened and we sold off. And we got held up a little bit around 2142, which was our developing volume weighted average price since Brexit. And then again at the lower value area boundary, we saw some acceptance and some volume building before we sold back off. But you can see what's interesting, this lower red line, 2136, that's that lower value area boundary from Brexit. The one just north of it at 2139 is the value, and I'm going to zoom out here. No, I can't. That's the lower value area boundary from Yellen's hawkish hold. So certainly once we broke through it, it acted as resistance, as as it should, and we sold off down to near 2120. It was quite the day. Zooming back out, maybe out here to the 5 minute, same kind of thing. You can see we chopped around into the overnight. Market opens and then whoop, smoked. So that's how it goes. Well, at least that's how it went today in the ES. Notably, again, running these stops, and if we kind of zoom out even further, this kind of support area around here, 2123, 2125, is where we finally caught a bid on fairly low volume, but we'll see how it shapes up from here. So successful trade today, and I'm not really sure how else to characterize it. It was a successful trade. So that's about all we got for you today, traders. I really appreciate you tuning in this evening. Best of luck in the markets. I really hope you found success today. Hope you find success tomorrow. If you like the material, like it. If you really like it, go ahead and click subscribe. And if you feel like you've anybody in your social circles can find value in the information, by all means, share it. There's no issue in doing so. I'd really appreciate it, actually, if you did. So, yeah, as always, your account, your money, and we'll see you here mañana for another awesome daily market wrap-up. Best of luck, traders.